Today, I would like to present to you the 10 most popular investment strategies. I hope this material will be interesting and inspiring for you. So, let's get started. 1. Value investing. Value investing involves searching for companies that are undervalued relative to their intrinsic value. To determine the intrinsic value of a company, various methods are used, the most popular of which are financial analysis indicators, such as P/E, price to earnings, or P/B, price to book value, are used to identify investment opportunities. 1. Intrinsic value is estimated based on fundamental financial data of a company, such as earnings, revenues, and cash flows. 1. Investors using this strategy assume that the market often overreacts in short-term valuations, creating an opportunity to buy stocks at an attractive price. 1. This approach requires patience, as undervalued stocks may need time to recover their true value. 1. It is a long-term strategy, requiring fundamental analysis and a solid understanding of a company's business. Required level of investor knowledge, intermediate. 3. Representatives. Warren Buffett, Berkshire Hathaway, the master of value investing. Benjamin Graham, the father of value investing and author of The Intelligent Investor. Dodge & Cox Funds, an investment fund known for its fundamental analysis and long-term approach. 2. Growth investing. Strategy description. This strategy focuses on investing in companies with high growth potential, particularly those operating in fast-growing sectors such as technology or biotechnology. 1. Growth investors pay less attention to current financial metrics and more to future expansion opportunities and increasing profits. 1. They assume that rapid revenue and earnings growth will compensate for high stock prices. 1. These companies often do not pay dividends because they reinvest profits into growth. 1. Growth investing requires a deep understanding of high-potential industries and markets. 1. Risk is higher because growth stocks are more vulnerable to market changes and competition. Required level of investor knowledge, intermediate. 3. Representatives. Cathie Wood, ARK Invest, invests in modern sectors such as biotechnology and technology. T. Rowe Price, Blue Chip Growth Fund, a fund focusing on stocks with high growth potential. Ron Baron, Baron Funds, manages funds focused on long-term growth of companies. 3. Dividend investing. Strategy description. Investing in companies that pay regular dividends is a popular strategy for investors seeking stable passive income. 1. Dividend-paying companies usually operate in mature industries with stable cash flows. 1. Investors seek dividend aristocrats, which are companies that consistently increase dividend payouts over many years. 1. This strategy is attractive to those who value safety and predictability, especially during economic uncertainty. 1. Dividend income can be reinvested into new shares, increasing the potential return on investment. 1. However, this requires analysis of the company's financial stability and its ability to continue paying dividends in the future. Required level of investor knowledge, beginner. Representatives. Vanguard Dividend Growth Fund, invests in stable companies with growing dividends. ProShares S&P 500 Dividend Aristocrats ETF, an ETF investing in companies with a long history of dividend payouts. John D. Rockefeller, a historical example of an investor who valued stable dividends as a source of income. 4. Index investing. Strategy description. Index investing is a passive strategy that involves buying index funds or ETFs that track the performance of the broad market or specific sectors. 1. It is one of the simplest and cheapest methods of investing, ideal for beginner investors. 1. Indices like the S&P 500 or MSCI World include a wide variety of companies, providing natural portfolio diversification. 1. This strategy is based on the assumption that, over the long term, the market as a whole grows, despite short-term fluctuations. 1. The management costs of index funds are low because they do not require active management by investment managers. 1. The key is to choose an index that aligns with the investor's goals and risk tolerance. Required level of investor knowledge, beginner. 3. Representatives. John Bogle, Vanguard Group. The creator of index funds and promoter of low-cost passive investing. SPDR S&P 500 ETF Trust, SPY. The most popular fund tracking the S&P 500. iShares Core MSCI World ETF. A global fund that tracks the world's stock markets. 5. Contrarian investing. 1. Strategy description. Contrarian investing involves buying stocks or sectors that are currently unpopular in the market. 1. Contrarian investors assume that the market is often irrational and may overestimate or underestimate assets. 1. They buy when others sell and sell when others buy, which requires courage and independent thinking. 1. This approach can yield high returns but comes with substantial risk, especially when the market is correct about a company. 1. It requires thorough fundamental analysis to distinguish truly undervalued stocks from those with lasting issues. 1. This strategy works best during strong market corrections or economic crises. Required level of investor knowledge, advanced. Representatives. David Dreman, author of Contrarian Investment Strategies. Sir John Templeton, a famous contrarian investor who bought stocks during crises. Oakmark Funds, an investment fund using a contrarian approach. 6. Momentum investing. 1. Strategy description. Momentum investing is based on investing in stocks that have recently shown strong price growth. 1. The idea is that stocks with rising prices will continue to follow this trend in the short to medium term. 1. Momentum investing often relies on technical analysis and tracking price trends on charts. 1. It requires frequent market monitoring and active portfolio management. 1. This is a short-term strategy and may be riskier than long-term approaches. 1. The key is to determine entry and exit points to limit potential losses from sudden trend reversals. Required level of investor knowledge, intermediate. 3. Representatives. AQR Capital Management, a fund specializing in momentum-based strategies. Richard Driehaus, considered one of the creators of momentum investing. BlackRock Advantage Global Fund, applies momentum strategy to global markets. 7. Buy and hold strategy. Strategy description. The buy and hold strategy involves investing in solid companies or funds and holding them for the long term, regardless of short-term market fluctuations. 1. It assumes that markets grow in the long term, and trying to predict short-term movements often leads to losses. 1. This is a passive strategy requiring minimal activity from the investor. 1. It is ideal for people who want to build wealth over a multi-year horizon. 1. Buy and hold can be applied to both individual stocks and ETF funds. 1. The key is selecting the right companies or indices with stable fundamentals and growth potential. Required level of investor knowledge, beginner. 3. Representatives. Peter Lynch, Fidelity Magellan Fund, one of the most famous long-term investors. Charlie Munger, Berkshire Hathaway, Buffett's partner and advocate of long-term holding. Vanguard Total Stock Market ETF, VTI, a fund covering the entire U.S. stock market. 8. Sector investing. Strategy description. Sector investing involves allocating capital to specific industries that the investor considers promising or undervalued. 1. This can be the technology, energy, healthcare sector, or others that currently have favorable macroeconomic conditions. 1. Sector investing requires knowledge of trends and factors affecting individual industries, such as politics, regulations, or technological advancements. 1. The risk lies in the lack of diversification since the portfolio is more concentrated. 1. This strategy is suitable for both long-term and short-term investors, depending on the selected sector. 1. It's important to analyze the financial metrics of companies in the sector to choose the best representatives. Required level of investor knowledge, intermediate. Representatives. ARK Innovation ETF, ARKK, invests in developing technological and scientific sectors. Fidelity Select Technology Portfolio, FSPTX, a fund focused on technology. Energy Select Sector SPDR Fund, XLE. ETF focused on the energy sector. 9. Technical Analysis. Strategy Description. Technical analysis is an investment method based on studying price charts and technical indicators such as RSI, MACD, or moving averages. 1. Technical investors try to predict future price movements based on past trends and patterns. 1. It is a popular approach among short-term traders who seek quick profits. 1. Technical analysis ignores the fundamentals of companies, focusing only on price dynamics and volume. 1. It requires regular market monitoring and knowledge of analytical tools. 1. It can be risky since short-term price movements are often difficult to predict. Required level of investor knowledge, advanced. Representatives. Paul Tudor Jones, uses technical analysis in trading strategies. Linda Bradford Raschke, a well-known trader and technical analysis expert. Fidelity Global Technical Fund, a fund based on technical analysis of markets. 10. Growth at a reasonable price, GARP, strategy. Strategy description. The GARP strategy combines elements of growth and value investing, focusing on companies with growth potential that are not overly expensive. 1. The key is finding a balance between growth indicators, e.g., revenues or profits, and reasonable valuation, e.g., a PEG ratio below 1. 1. GARP investors avoid both extremely expensive growth stocks and cheap but stagnant companies. 1. The strategy requires in-depth financial analysis to identify companies that meet both criteria. 1. It is suitable for long-term investors seeking stable returns with moderate risk. 1. GARP is often applied in dynamically growing sectors, where undervalued opportunities can be found. Required level of investor knowledge, intermediate. Representatives. Peter Lynch, an excellent example of an investor combining growth and value. T. Rowe Price, GARP funds focusing on companies with growth at reasonable prices. Schwab US Dividend Equity ETF, SCHD, a next example of a GARP fund. Which of the mentioned strategies do you apply in your portfolios, or perhaps it's a combination of the above? What is your approach to investment strategy, and has it changed as you gained more experience?